This is going to be video number 2 for section 8.2, and it's about federal withholding, which we're going to call FIT, federal income tax withholding. This slide explains a little bit about exemptions, so you might want to pause and read through this because each of us has the opportunity to take a certain number of exemptions depending on how our family, how many kids do we have a spouse, and those kind of things. The more withholdings or the more allowances you have, that's what it would be, exemptions or allowances, then the less is withheld from your paycheck. So, it just really varies a lot depending on the situation. And so when we're looking at federal withholding, we have to find something called taxable wages. And we use the taxable wages for the federal withholding tables, so we have to determine what that would be first. And we do that by, number one, we multiply the number of withholding allowances times the amount across from the payroll period. So there's a weekly, bi-weekly, semi-monthly, and monthly. We kind of talked about that back in section 8.1. And so it just depends on how often you get paid on how we calculate that. And then we have to know how many allowances that the person's going to claim. And then we subtract that from gross wages to get the taxable wages. So here's an example of that. Sue, an executive for Smells, an aromatherapy candle company, notice she's an executive, so she makes quite a bit of money, has earned a gross wage amounting to $3,500 during the company's bi-weekly pay period. Okay, so it tells us right here that we are on a bi-weekly pay period. All right, hold on, I was going to highlight that. Bi-weekly, and she has earned $3,500 for that pay period. Sue is single and claims 2 allowances. Now the single part doesn't matter on what we're figuring right now, but it will here in a minute. All right, so she has 2 allowances, and she's on a bi-weekly. So we're going to take this amount, $159.60, and multiply it by 2, because that's how many allowances that she is claiming. So $159.60 times 2. And then we're going to take that amount, which is $319.20, and subtract it from her gross pay. So take gross pay minus her allowances, $319, the amount that she gets to take off of her gross pay, and then that leaves us with this number, $3,180.80. Now this is what we call her taxable wages, right? That is taxable wages. And we're going to use this number again when we go to the federal withholding charts in order to look up how much she's going to have withheld for her federal income tax. So remember that number is $3,180.80. All right. Then we have to take this chart, and the chart can be kind of hard to read. You can find this also in your book, and figure out where on this chart are we going to go based on this person, Sue, who is paid bi-weekly, and she is single. Now, the federal withholding charts have 8 portions here. You can see it's split. On the left-hand column, it's single, so that's where we're going to be for Sue. The right-hand column is married. And then now we're looking for bi-weekly. Well, bi-weekly is right here. And then she's single, so this is the chart that we will be looking at to figure out her withholding. All right, so that's the first part of it. We find that portion from the 8 sections on the chart. Where is she listed on that particular one? So she's single, she's paid bi-weekly. And then I have it blown up a little bit more here. Now what we're looking for is the amount of money that Sue had, the amount of money for her taxable wages, which was $3,180.80. And so we go to the chart and see, where does that fall? Notice it says over, but not over this amount. So it has to be between those two numbers. So when you're looking at this chart, you'll see that it's right here, right? Between 1631 and 3003.15. That's where her pay falls. So we're going to use the chart then to write out a few things here, and I kind of have this listed in a certain way to try to help you work your way through this. So she has to pay $171.34, $171.34 plus 22%. You see I have that highlighted of the excess over 16. Let me circle that a little better. 1631. So this amount will be here, $1,631. And so I'm just going to keep filling out the chart this way. 22% becomes 0.22 because we're going to be multiplying. Now the excess over the 1631 means the 3180.80 over 1631, so we have to subtract and see how much is that over, and then it's just a simple subtraction. This part stays the same, right? We're just working our way down the page so I can show you exactly how to calculate this. So when I subtract, I get 1549.80, and then I'm going to multiply that by the 22% or 0.22. So she has to pay $171.34 plus whatever I calculate here, and that would be $340.96. So the total for her federal withholding is $512.30, right? And so we went through all of that to find this number, right? The amount to be withheld. All right, let's go to the next example. Find the federal income tax withholding for Rufus Leaking, CEO of Shingle Mart. Notice he's a CEO, so once again, that means he's going to make a little bit of money. He is married and claims 3 withholding allowances on his W-4 form, and his paycheck was $3,650 in gross wages on his semi-monthly paycheck. Okay. So we're on a semi-monthly this time, and that means we're going to be on this column right here, or this row. This is a row on this chart, and he has 3 withholdings. So we're going to take 3 times 166.70, and that is $500.10. All right. And so then we're going to subtract that from 650, and that will give us his taxable wages of $3,149.90. Remember to pause this at any time that you want to stop and work something out and kind of, have a chance to see how it all works out. Okay, so we're going to use that number again, right? That's his taxable wages. Taxable wages right there. Okay, well that didn't work out so well. $3149.90. Now, he is being paid semi-monthly, and he's married, right? So that means we're on the right side of the chart in the right column. And we are on semi-monthly right here, and married, right? So this is the part that we would need to look at to find his taxable, or his his federal withholding. We're going to go to the next slide because I made it a little bit bigger. Hopefully we can find it easier. So this is a semi-monthly for married. Remember that the amount is $3,149.90. And we have to see where is that number on this chart. So when you're looking, 3,149 is going to be between 1275 and 3706 right here on this row. And so we're on the second row down on this portion of the chart. All right, so he's going to pay 79.40 plus 12% of the excess over $1,275. Now you might notice there's quite a bit of difference here. These salaries are not that much different, but because he's married, it works out with smaller withholding amounts, and that's really what happens. All right, so the fit would be 79.40. 12% is 0.12. We're going to subtract from his taxable wages the $1,275. So we just keep working our way down the chart. I deliberately set it up this way to help you guys understand this process because it is quite a process. We're multiplying the 12% times 1874.90. That's what I got from subtracting the $1,275 from his from the taxable wages, and so that was $224.99 when we calculate that, and this is 79.40, and then we add those together, and that is 304.39. So these two had similar wages. There was not that much difference in the amount of money they made. One was biweekly, one was semi-monthly, so of course that's a little different. But you can see the person who's married ends up having overall less of a tax burden on that. All right, so that's the end of this video, and I will finish this lesson on video number 3.